Hi there, welcome to Kneppy Invest and welcome to another technical update video. I'll be focusing on indices, commodities, bonds, bitcoins, and then I'll feature about 15 or so companies that have broken out in response to the company's release of their half year or full year results in February. And that is the sort of trade I'm always looking for, and plenty of opportunities right now to take advantage of this sort of setup. But first of all, let's have a look at the charts. First chart we're going to look at is the XJO, not the gold, which I just had up then. But the XJO possibly is breaking out into an uptrend. All-time highs. In fact, a really good week after a few, won't say subpar weeks, but a few boring weeks. And when I say boring weeks, in terms of the movement of the XJO, neither up or down very much. In the past week, the XJO was up about 1.33%. And if you do look at the daily chart, you can see it has gone to all-time highs. I'm pretty sure this is an all-time high at 7,745. Yes, all-time highs. And even interesting enough, the XJO has been struggling to get above about 7,700. We'll say between 7,500 and 7,700. And on the Friday, the last trading day of the week, the XJO has got above that. Now, it remains to be seen is if this is a breakout. I like confirmation because this could be a false breakout, but really good day on the American markets on Friday, and this should translate to the Australian markets. Doesn't always translate, but it should translate. So I am expecting another good day when the markets open on a Monday. So the XJO is looking the most bullish it has for quite a while. In fact, it's probably looking the most bullish it has since 2021, when the XJO was in a beautiful uptrend until it reached its high in August of that year at 7,629. Actually, no, the high was 7,632.8. So the XJO is in new territory, all-time highs. Can't say the same thing about the XSO, which is a small ordinaries index, but even this index is looking a little bit more bullish. It has moved into an uptrend. Last time the XSO was above 3,000 was way back in early 2023, late 2023, when it only went above 3,000 for a very short period of time. That was not a bullish move. Now we are looking at a bullish move. The next number I want to look at breaking above is 3,100, which would be the highs back in July or August of 2022. And just by looking at this chart, it does look bullish. So we are at a new higher high, and we have seen a higher low. So full steam ahead for the XSO, full steam ahead for the XJO. And that has been true for the American markets or indices, particularly the NASDAQ, the Dow Jones, S&P 500. So let's have a look at the NASDAQ right now. It has been in a bull run for quite a while. In fact, I'd say probably the bull run started towards the start of 2023. And since then, it has risen 50%. Yeah, the NASDAQ has risen 50% since March of 2023. So we are talking about a 1 year period where when the NASDAQ has risen 50%. The main drivers of the NASDAQ bull run have been that Magnificent Seven. I don't like those sort of terms. It used to be the FANG stocks. Now it's the Magnificent Seven. And those stocks, those Magnificent Seven stocks, have really been driving the NASDAQ higher. But even if you have a look at the Dow Jones, which does not have any of those Magnificent Seven in their indice, this is Industrial 30 companies. This has been in a beautiful bull run as well since the lows in October. So things are looking really good in the American markets, apart from maybe the small caps. And the Russell 2000 is a small cap proxy indice, the smallest 2,000 companies on the Russell 3000, which is sort of like a combination of the S&P, well, the New York Stock Exchange and the NASDAQ companies. So sort of like the three biggest companies in those two indices. And this is the two smallest companies within the Russell 3000. And we do use this as a small cap proxy. In fact, it's called the US Small Cap 2000 Index, but it's Russell 2000. But anyway, This is breaking to, I won't say all-time highs, nowhere near all-time highs, but the last time the Russell 2000 was at 2076 was 2 years ago, almost 2 years ago. And this is starting to look bullish as well after being in a trading range for quite a while. So things are moving really well for indices around the world. Well, in Australia and United States at least. Sometimes I will look at some other overseas indices, Hang Seng, and those ones, the German one, the UK one, those sort of thing, the FTSE. But I really only look or focus on the American and the Australian indices. Anyway, let's have a look at commodities. And last week, I was fairly bored with the commodities. Not much action was happening, but this week is different, particularly the last few days of the trading week. Let's start with gold. And gold looks really interesting right now at 2082. Now, gold has struggled to get above this resistance zone between about 2040 and 2080. Whenever gold gets above 2080, we see a lot of selling, and gold slips back below 2080 quite quickly. We saw that, in fact, we saw it happen back in December, late December of last year, but we really saw it happen on the 1st or 4th of December last year, when gold went all the way up to 2,150 and then fell back below 2,080 really quickly in one day. That's that one-day candlestick you can see with a really tall tail or tall shadow above the main body of that particular candlestick. And you can just see gold really struggling and getting above 2018 or 2080. And it's been struggling to get above 2080 for about 3 years, if I remember correctly. Let's have a look at the weekly chart to verify that. Yeah, so we saw gold get to 2080 back in July or August 2020. So we are talking about 3.5 years. And every single time it gets to 2080, it pulls back. And right now, as I'm speaking, gold is at 2082.65, right on this very important level. A really bullish day on Friday, up 1.9%. Not sure what caused that bullish run in gold, but eventually gold will get above 2080 and remain above 2080. This is a fait accompli. It is going to happen. Well, when it happens, I just don't know. It could happen, well, it's already happened, but it could remain above 2080 for the rest of our lives. Just don't know. But long term, have to be bullish on gold. Other commodities, we've seen some really interesting action on other commodities. This is iron ore. What happened to iron ore on, I'm just going to actually decrease my screen here. What happened to iron ore on Thursday, the 29th of February? Down 6.7%, and it's remained down. It's down to 115.7. It did reach a high of about $144 back at the start of 2024. So something definitely happened on Thursday. Not sure what happened on that day, but it did lead to iron ore prices falling a fair bit. So this is much bearish, and it's understandable why a few of the iron ore companies on the ASX saw the share price take a little bit of a dive on the Friday. Not a big dive. You would think there would have been a bigger dive, but not as big a dive as this. So something happened with iron ore on Thursday, 29th of February. Maybe it was just the last day of the February. Maybe it was the leap year February, 29th of February. Who knows? I don't know. But iron ore is looking much more bearish. And it's funny, I'm well behind on my Ausbies the Core. I'm almost a month behind at the moment. And it's really interesting because about a month ago, iron ore was starting to look less bullish, but even 1 month ago, there were some experts who were saying they were bullish on iron ore because of the chart, but the chart didn't look bullish at that point, and it's looking much less bullish right now. On to uranium, down to 94. You have to have a look at the weekly chart on this, on TradingView. So 4 actually down weeks in a row for uranium, and this is why some of those favorite uranium companies are still, their share price is still dropping. I would favor Boss Energy. Still could fall a little bit more from here because it's still not in a support zone, and that support zone is the shorter term moving average channel, which I have here shaded in green. So we have seen that area act as a support level for uranium over the past few years. So we would be looking at uranium getting down to, say, about 88 to maybe even $80 before we do see uranium in a support zone. So uranium having some problems right now, but this could be just buy the dip opportunity. So I do have a few uranium companies on my watch list. And if we do see uranium starting to rally again, that could be a good time to take advantage of that rally. Oil, okay, oil's boring. Nothing happening with oil. Going sideways in a sort of a halting pattern, whatever you want to call it, a consolidation pattern, halting pattern. I'm not sure where I got that from. Oil, just going sideways. Nothing too interesting. Lithium, on the other hand, had a bullish week. Lithium rose 9.7%, and you might have seen quite a few lithium companies go on a bit of a run on Friday. And the whole reason is because a little bit of excitement in the lithium space right now. There is a thought out there that lithium has hit the bottom and the lithium prices are going to stabilize. And this could be the first sign. The first up week lithium have seen since June 2023, when it was up, it's at that week here, June 26, up 11.6%, and then it was down every week from then. So potentially lithium has reached a bottom, and that's why there has been a little bit of excitement in the lithium companies on the ASX. Copper, no idea what's happening with copper. Just like your oil, I want to see a breakout in copper. Please, copper breakout. But at this point in time, just like oil, copper is going sideways. Looks like coal had a nice day, Newcastle coal. Nice week, up to 9%. Wonder why some of the coal companies didn't rally, although Yancoal's chart did look much better than New Hope and Whitehaven. For some reason, Whitehaven coal chart doesn't look all that bullish. And is that it? Yeah, that's it for the commodities I want to show you today. Now let's have a look at the bonds. But before we have a look at the bond, actually, no, we'll look at the bonds first. Wanted to see if bonds have fallen. Not really. We'll have a look at the daily chart here. Yeah, bonds have fallen during the week. A bit of a downturn. Maybe the top has been reached, but this could be just. So you can see in an uptrend, you'll always have small periods of time, short periods of time, where the price of anything in an uptrend will drop, and possibly that's what's happening with bonds right now, because we did get a higher high, and if bonds don't fall below 4.1%, we might have a lower low as well. So even though bond prices have fallen a little bit over the past week or so, doesn't mean the top has been reached for bonds. Now onto Bitcoin, and I'm just looking at the price of Bitcoin right now, and Bitcoin has gone on a run, which is understandable because I had a look at my holding in Bitcoin, and it was much higher than it was just a week ago. So obviously Bitcoin had a really good week. So let's have a look at the daily chart for Bitcoin. And yeah, so for some reason, there was a lot of love in Bitcoin on Monday, Tuesday, and Wednesday, up 5.4%, 4.7%, and 9.5% in consecutive days. And then the next 4 days, Bitcoin going sideways. Really bullish move to see after that sort of run, the price of anything you're tracking going sideways. That's a really healthy move. That means there's not enough selling to drive the price of that thing down. So in Bitcoin right now, not enough selling, and that's why you're seeing volume actually drop. Good sign, volume dropping, and I think Bitcoin looks really bullish here. And one of the reasons I actually did buy Bitcoin was just that off chance that Bitcoin is the future, and also decided just to trade it, just to see what happens. And this was a good trade. Of more than doubled my money now because I bought way back here somewhere. Way back here, about 20, was it 20? I forget exactly what I bought it at. No, I think I could have bought it to hit this breakout. No, it was earlier than October. I can't remember. Anyway, that's all I have for indices, commodities, bonds, and Bitcoin. Maybe I should also include Ethereum, something like that. But I'm more interested in Bitcoin than anything else. Now on to individual companies. These are companies whose share price broke out. This is not a complete list of companies that broke out upon the release of their half-year full results in February. This is just a subset of that set. I couldn't bring you all the companies, or maybe I could have, but these are some of the companies. Some of the companies I own, some of these companies I am trading, but some of the companies I am not. First company is ServiceStream, and this company I am trading. I bought it 81 cents back in June last year, and I think I mentioned the grind higher was so slow. You can see the share price just grinding higher from about July all the way through to February, just before the company released their results. And then the share price just popped up on the release of the results. So one of the things I'm looking for to verify a breakout, and these sort of breakouts can be quite powerful. So what I'm looking for is the release of some positive financial news. So I'm looking for a share price breaking out to the upside, not to the downside. So positive financial news, share price breaking out or increasing to at least a 6-month high, and increased volume, significant increase in volume. So do we have those three things for all these companies? Let's have a look at ServiceStream. Definitely share price breaking out to at least a 6-month high. In fact, this chart goes back to the middle of 2022. So we're talking about a multi-year high for ServiceStream, breaking above $1.07. Positive financial news. They released their half-year results, and that's why the share price has rallied. But look at the volume. Huge volume coming in the last 4 trading days. In fact, we say the last 7 or 8 trading days. This is really important. When you see this sort of increase in volume, and look at the comparison to what happened before the release of their financial results, volume was really, really low. You'd struggle to see volume above 1 million shares. Now we're seeing volume get between 10 and 12 million shares per day. And that is telling me institutions like this company at this point in time. They like the results and they're positioning themselves, buying some shares, allotment in shares, and that's why the share price is rallying. And who knows how much further it has to rally from here. We've seen, was it 5, 7 up days in a row for ServiceStream. This is the very definition of a breakout. Now, I am now up not quite 50%. I'm willing to take my profits eventually with ServiceStream. Definitely not a quality company. Definitely not a company I would want to own for the long term. Now, onto 2 companies I don't own. The first one is HiPages. Not the sort of business model I like, HiPages and Airtasker. There are a few reasons behind that, but you can't deny what's happened with HiPages after they released their results. Share price has broken out at least a 6-month high. Tech, financial results, tech, volume. We saw some really big volume coming in on the Thursday the 22nd and Friday the 23rd. But unlike ServiceStream, we haven't seen that volume continue into the following days. But at least the share price has broken out. So I probably would like to see some increase in volume right now to maintain this uptrend, this breakout. So probably one company I do have on my watch list, but probably not willing to trade this company right now, simply because I don't like the business model. That's just me. I'm not the biggest fan of this company's business model. Universal Holdings or Brands, Universal Store Holdings. This is another definition of a breakout. I was waiting for the share price of this company to get above $4.40, which was the highs we saw back in January. But at $4.60, or just shy of $4.60, the share price of this company is at least 6-month high. So we are talking about May last year, so a 9-month high in the share price. Again, on the release of their financial results, the share price popped up. It was about 12% or so. You got 13.2%. Increased volume, not massive volume, but increase in the volume. You can see compared on that day compared to what volume has been during the past, say, 6 or so months. And the volume maintained a little bit, but did decrease over the next few days. Now, we have seen share price just go sideways after release of these half-year results. So a little bit of selling has come in. It's a little bit of buying. I do like this sort of pattern. When the share price breaks out and the share price just goes sideways, there is a good chance, not a 100% chance. There's no 100% certainties in any sort of forecasting the movement of anything. In any sort of forecasting, there's never 100% certainty. But I do like the chances here that eventually Universal Store Holdings, got to get that store right because Universal is a different company altogether. They make movies, not shoes. There is a good chance, I think, Universal Store Holdings share price will move above $4.57 where it is now. And if it doesn't, if it falls below $4.40, that would be just take your 5% loss or something like that. Now, to a company I do own, Lovisa. I am pretty bullish on Lovisa long term simply because of their expansion plans. So let's just put that out there. This company is in my quality portfolio. I plan to hold the shares in this company for as long as possible or until they change their plans. If they decide I don't want to expand overseas anymore, I will sell my shares almost immediately. Company released their results. probably on the 22nd of February, I'm guessing. Share price broke out on that day. And it's not interesting, the share price on that day hovered just around the resistance level, which was around $27, which was the highs we saw back in April 2023. And then the next day, the share price kept on climbing. So that was confirmation that that Lovisa Holdings share price had broken out on the release of their half-year or full-year results. Increase in volume as well. Not a massive increase in volume, but sustained increase in volume is a good sign. And if I remember correctly, there was an upgrade. Some broker did upgrade Lovisa Holding. And for some reason, some retail investors love when brokers upgrade or downgrade companies' share price targets, that sort of thing. I don't look at that at all, and I don't think anyone else should look at it either. But in this case, it was beneficial for my holdings in Lovisa. Share price has risen from about $25 up to $31.97. And I'm pretty sure the share price of Lovisa is at an all-time high. Yes, all-time high. Look at that weekly chart. And that is why this was actually a really powerful breakout and why there was a little bit of resistance on that day. You can see the share price of Lovisa really struggled to get above $27. And the reason why it struggled, just go back in time, look at it. On 1, 2, 3 occasions over maybe an 8-month period, share price tried to get above $27 and failed. That's why getting above $27 was really strong, because it's a psychological barrier. So a lot of traders, even investors, know that when Lovisa got to $27, there was a little bit of selling. And if you listen to Oz Business Call, you'll hear David Koch, wherever how you pronounce his name, always say, he says this maybe, I've heard him say this maybe 5 or 10 times, you can always trade BHP because it trades between a range of $40 and $50. It doesn't. It doesn't. But that psychology is there, that some companies do trade in ranges, and then when a company share price gets to the top of its range or the resistance level, which the top of range is, that's the time to sell. So when the share price got to $27 when they released their results, that was a trigger for some investors to sell. But the next day, when there was not enough supply of shares and there was a lot of demand for shares because of that broker upgrade, that's why the share price took off. And those traders who sold at $27 the previous day went, oh, this is a breakout, I'm going to buy some shares. So there is a possibility that some of those people who sold out of the shares of Lovisa on Thursday, 22nd of February, were buying back in the very next day because they expected the share price to take a tumble once it reached $27. It's all psychological. And one of the ways to beat that psychology is for a company to release a really positive financial news, and you see increased volume because institutions start to buy shares in that company. Codan. So I was a holder of Codan, and then I sold because it was just creeping higher, just like Service Stream. And then I sold my shares, and that was a mistake, I suppose, because the share price of Codan has broken out on their release of their financial results. Share price increased 17% on the day, 21st of February. And you can see the share price going sideways after that. That's a good sign. So maybe I should buy back in on Codan just based off this chart. Share price at least 2-year high. Last time share price was this high was back in November 2021. So I'm talking about 2.5 year high for Codan. So I have not had a look at the company's report. In fact, most of these companies, I have not had a look at their report, apart from ServiceStream. So you can see, if you can see my watch list here, there's a little note, a red colored in shaded area here. That means I have actually had a look at their financial report. So I've had a look at ServiceStream, had a look at this other company, Pinnacle Investments, whatever that's called. I'll have a look at that company later. But this is the very definition of breakout. Probably the only thing, I probably would have liked to see high volume coming in, but there was high enough volume, but volume has reverted back to normal after those first 2 days where we saw the share price went on a massive rally. So a really good chart for Codan, nice breakout for that company. Now onto Jumbo Interactive, another company I don't own, but this is another, the very definition of a breakout. Share price moved towards a resistance level before the company released their results, and that breakout level was around about $16. And you can see the share price reached $16 for this company in January last year. It reached $16 for a very brief moment of time on the 28th of August of last year. So around that level, $16 or just above $16 was a really strong resistance level for this company. And then what happened when the company released their results? Share price didn't struggle to get above $16. It broke above $16.17 on strength. That's exactly what you want to see. And this is the very definition of breakout. Share price has risen to a long-term high. Last time share price was this high was 2 years ago almost. Pretty big volume coming in as well. Good volume, release of financial results. So we have all the satisfactory requirements here for a breakout. A Kneppy's definition of a breakout, or my definition of a breakout. I don't want to speak in, what's it called? First person, whatever it's called. Third person? I have no idea. I was never an English major. Aussie Broadband. Okay, so I am owning Aussie Broadband shares for the long term, but I'm also trading this company right now. And I bought on this breakout back in August of last year at 351. And there was another resistance level at about $4.20. You can see share price rose after that breakout in August, rose quite quickly to $4.20, but struggled to get above that level. And then you can see on the 8th of February, it got to 420 and then pulled back just before the company released their results. And then when the company released their results, not only was it satisfactory results, the company also issued an upgrade. So when the company releases the results that beat market's expectations or even their own expectations, and the company releases a profit upgrade, that is sort of like a double, not a double whammy, sort of the opposite of a double whammy. Really good story. And that's why the share price of Aussie Broadband increased 19% on that day. A little bit of selling coming in on Aussie Broadband. And I think one of the reasons why a little bit of selling has come in for Aussie Broadband is just they just recently acquired one company, Symbio, and they've announced they want to acquire another company called Superloop, which I am trading as well. Did I include Superloop in this? Yes, I have, in 2 companies' time. And I think the market is just trying to tell Aussie Broadband, just hold back on your acquisitions. Don't have to be so acquisitive at this point in time. But they probably see some value in Superloop, because I definitely see some value in that company. So this could be just an opportunistic acquisition. And Superloop's board have said, no, this is way too cheap. It's a disgrace. Well, I wouldn't say a disgrace, but it's insulting the price you want to pay for Superloop. It's an insulting offer. If they didn't say that, they should have said that. And it's funny because I own both companies, and if I didn't own Aussie Broadband and I just owned Superloop, I would have found the price they were willing to pay insulting. If I only held Aussie Broadband and I didn't hold Superloop, I would have thought this could be the greatest acquisition, the cheapest acquisition in history. Because I'm a shareholder of either or both companies, I'm like, yeah, well, it's win-win sort of, or even lose-lose, depending on which way you look at it. Reliance Worldwide Corporation, I've held this company in the past. I had a quick look at their results when they released it. I didn't see anything overly good in them. The market thought differently. Look at that jump in the share price. Look at that rally, and the share price has broken out. The last time share price was this high for Reliance Worldwide, we're talking about 2 years ago, start of 2022, when the share price had just moved into a downtrend. So we got the breakout, financial results, increase in volume, particularly when the share price broke out, and the share price just kept on rallying. So share price now at 560. I just don't see any value in this company. Price to earnings ratio at 23.2. Yeah. So even though I've held this company in the past, in fact, I held this company for a long term just after they listed. Look at the weekly chart. You see share price went on a really nice rally in 2017 and 18, and I held it at that point. But you can see the share price has been quite volatile since then, and the share price is getting towards a level you might say there's resistance. But it's a growing company, but albeit slowly growing company. But still, this is a breakout, and maybe I shouldn't discriminate. When I see a company share price or shares breakout, I shouldn't discriminate between companies I like and companies I don't quite like and think it might be overvalued, because I could be wrong. Okay, on to Superloop. Been following this company for a long time. It's been a downtrend for a long time. So I was just patiently waiting for the downtrend to end. I was following this company before this little pop up in the share price back in 2021. And share price, or the shares in Superloop, were trading in this range since about March of last year. And I was waiting for the share price to get above about 73 cents, which was the top of that range. And we started to see just before the company released their results, share price just trying to get above that top of the range, that 73 cents level. And I said to myself, as soon as the company releases results, and if the share price starts to increase, buy some shares in this company. So when the day the company released their results, I bought shares. I don't always do that. Sometimes I do wait a few days, and I just needed to buy shares in Superloop because I thought this was the very definition of breakout. And then Aussie Broadband put in their offer for Superloop, which was well below where the share price is right now. So the market is even dubious that this offer will go through, even though the management have said this offer is insulting. And I think the market is expecting that Aussie Broadband will come back with an improved offer. So typically when there is a takeover bid for a company I own, I almost always sell out of that company. Not always, but almost always. This is an instance where I'm not willing to sell out of my shares in Superloop just yet because it is an insulting offer, in my opinion. And I do think shares in this company have the potential to run further, particularly if Aussie Broadband put in an improved offer, which I think the market expects. I don't expect anything, but who knows? Okay, well, quite a few to go. I've already done a video on Q Energy, so have a look out for that standalone video, but this is the definition of a breakout. Really big volume coming in. I did put a sneaky bid at 9.5 cents. It wasn't a hit on the Friday. Share price fell to a low of 9.9 cents. Did I say 9.95 cents? I put in a bid at 9.5 cents. Shares fell to a low of 9.9 cents. So my bid's still in the system for Q Energy, but this is the very definition of breakout. Just look at the volume and have a look at that particular video. I also did a standalone video on Apiam Healthcare. So I just want to have a look at what the share price has done since I did that video. Share price has done nothing, going sideways, bit of a sort of a triangle developing there. I'd like to see the share price get above 40 cents to really confirm the share price in this company is breaking out. So a nice looking chart for Apiam. Share price almost at a 6-month high, but not quite. That's probably one of the things against this particular breakout. Share price not quite at a 6-month high. Adairs can't say the same thing about Adairs. Share price is definitely breaking out for this company. Company released their results. You can always, I don't even know when these companies release the results. I'm just sort of guessing, an educated guess, just based off the chart and share price movement on that day. So shares in Adairs increased. Where is it? Increased 15% on the 26th of February. Share price broke out on the day, and share price has kept on rising. Sometimes you will see that. Share price closed on that day at $2.10. Now the share price is $2.38. So you could have bought at the end of that day and still be 10% better. Again, I'm not the biggest fan of this company, and probably I should not be trading the company. I should just be trading the chart. Exercise my biases. Take away my biases from the system, from my decision making. So this is the definition of a breakout. Positive financial news, volume, share price at about a 2-year high. Actually, no, 1-year high. Last time share price was this high was in February of last year. So 1-year high for Adairs. Chart looks pretty good. Beacon, yeah, Beacon. I'm not sure this is the definition of breakout. It's harder to see when this company did release their results. So I'm going to move on to another company. Cettire. Okay, definitely Cettire. I'm planning on doing a half-year result video for Cettire. It's been waiting for me to do a video on it since the share price, or that they released their results back towards the start of February. So we're talking about the 7th of February. So almost been waiting a month to do this video on Cettire. And I bought some shares in this company quite a while ago, probably towards the end of December or towards the end of 2022. Shares in this company are quite volatile. No, I didn't buy then. I bought. I forget what I bought. Anyway, the most important thing is what happened when the company released their results. Share price popped up on that day by 25.2%. Results were good. Big volume coming in on that day. Share price at a multi-year high. Last time share price was at high was back in November 2021. And probably the most important thing with Cettire right now is where the share price is compared to the all-time high of the company back in November 2021. So I'm pretty sure, let's have a look at the all-time high. So the all-time high for this company was $4.81. And look where the share price is right now, $4.83. So we are at an all-time high for Cettire. And just look what happened to the share price of this company when they released the results. So some people would be would not be willing to buy a company when the share price increased 25% in one day. And I've even heard some experts say this. Well, you've missed out. The market is perfect. Maybe I'm putting words in the mouth, but the market reacts almost perfectly when a company releases these sort of announcements and the share price increases 25%. You've missed your chance. You have to be holding the company before the share price increases. That's absolutely baloney. There is one person I'm thinking about in regards to that. Quite a few of these charts, you'll notice the share price keeps on going up after the share price breaks out. Now, this was a breakout. Yeah, this was a breakout because the share price was struggling to get above this level right there. Now, there was a resistance level at $3.60. And when the company released their results, the share price broke out on strength. Massive volume coming in, and the share price has just kept on going up. So you could have bought on that day at, say, $4 and be 20% higher right now in your shares in this company, even though the share price on that day rose 25%. So don't be shy when you see the share price of a company rise 25% in one day. Don't be shy about buying shares in that company. Share price could move significantly higher. In fact, I've done research on this, and these sort of breakouts work for about 6 months. There is a signal 6 months after the breakout. Now, once you go from 6 months to a year, the signal becomes less clear. When I say signal, I'm talking about the share price performance of the company that breaks out compared to the market. So in that day to 6 month period, there is a signal that these companies will outperform the market. Now, when you're talking about 6 months to a year, there is less of a signal. So the power of the particular announcement or the breakout becomes less powerful after about 6 months. So I did this research about 1 year or 2 years ago. So don't be nervous when you do see a breakout like this happen with Cettire. Kogan, and just for, I bought a breakout of a company where the share price rose about 100% in one day. The share price went from $3 to almost $25 at a high. So increased eightfold after that breakout, after the share price increased 100% in one day. So you don't listen to those people who say, we have missed the boat if the share price increases 100% in one day. You haven't necessarily. It takes a while for the market to digest. Okay, Kogan. Okay, this is definitely a breakout. Yeah, without doubt. Share price, when they released their results, the share price increased 24%, just like Cettire. Massive volume coming in. Look at that volume coming in. Huge volume on the day. Share prices continue to go higher. Doesn't mean we won't see a pullback. And the last time share price was this high at, we'll say $8. Last time the share price of Kogan was $8 was 2022, February or January 2022. So we're talking about a 2-year high for Kogan. Now, I do own Kogan shares. I had been trading it, and I really should have traded Kogan with this breakout. It was a good results, but I didn't expect the market to like the results as much as they did. When I say like it as much as they did, 24% higher as much as they did. Quantum Intellectual Property. Did I do a standalone video on this company? This is a beautiful breakout. In fact, this breakout the initial breakout wasn't on the release of the financial results. The initial breakout, just before I bought in, was on the 23rd of January when the company released a trading update, hinting the results are going to be quite good. And that's why the share price on that particular day rose 14%. You can see the share price go sideways. This was a really good breakout. So my favorite breakout is a profit upgrade. And my next favorite is sort of a breakout on good financial results or the half-year, full-year results. Those are my two favorite breakouts. This was on a trading update, profit upgrade, share price rallied on the day, not massive volume. And I remember thinking, and one of the reasons why I took about a week to take a position in this company was I just didn't see that volume. But look at the volume increase when the company released their results, which was on the 20th of February. Share price increased 10.2% on that day. And then there was some rumors about a takeover bid for this company. On the 27th of February, share price rose another 17%. You'll notice the share price fell a fair bit on the 23rd of February. I'm pretty sure the shares in this company went ex-dividend on that day, and that's why the share price fell. Two of my companies went ex-dividend on that day, and that's why the share price fell a fair bit. And those who sold out on the day are probably kidding themselves because they could have sold 2 days later at a much higher price. Okay. Reece Limited. This is not really a breakout. This is just a continuation of an uptrend because the share price was already at a 6-month high. So I'm looking for the share price for a true definition of a breakout. We're looking at a share price before the breakout not at a 6-month high, so maybe a 3-month high. And then on the breakout, share price is at least a 6-month high. For Reece, this is not a definition of a breakout, but when the share price of a company rallies 18% on the release of their results, I will always pay attention. So it seems like the market was right about this company. I don't know why. Again, I had a quick look at their results. The results were actually quite good, but you can't fault, you can't say anything negative about this chart at this point in time. The last time the share price was this high, share price did get to all-time highs. So share price did get to all-time highs when, actually the following day, the next day after they released the results, and a little bit of selling did come in that day. More than likely, the selling came in on that day because the share price reached an all-time high. And investors know, a lot of investors know when the share price of a company gets to an all-time high, so a little bit of selling came in, maybe some profit taking, that sort of thing, because the shares on this company have gone on a beautiful run over the past year. So the true breakout for this company would have been, well, on the 2nd of February last year. So that could have been on the release of their results. If I did trade this company on that breakout, I probably would have sold well before this particular breakout, which is not a breakout. But anyway, and some pretty good volume coming in, but increased volume when we did see selling in the 2 following days after the company released their results. A company I do own, Ventia. I'm going to call it Ventia from now on. So this, just like Reece, this is not a traditional breakout. So the breakout of this company happened, and it wasn't on financial news. This is just a chart breakout. So I think these sort of breakouts are less powerful, but I don't ignore these breakouts anyway. But there was a resistance level at $3.10 for this company. And just look at the chart. Why was this a resistance level? So share price got to 310 in September 2022, got to 310 in July 2023, and struggled to get above that level. And even when the share price did get above this level, it went sideways. So a little bit of selling came in. People were thinking, investors, traders were thinking this could be a false breakout. Share price went sideways. And then when the share price reached the shorter-term moving average channel, the shaded green area, share price started to move up. And I think at that point, the market was convinced that this was a breakout. Share price had reached or went above that breakout level for a long period of time, like a 3-week period. And that's why we did see a little bit of buying coming in during that period. And then the company released their results, and that's why you see the share price just go higher. In fact, the share price went from 330 up to 380. I do have this company in my long-term portfolio, but I don't think this company is necessarily a high-quality company. Well, I think one of the reasons I bought this company was just the dividend yield. I did see some value because the price-earnings ratio was like 10 or 11 when I bought, and the dividend yield right now is at 6.3%. So when I bought, I don't remember when I bought, so it would have been June 2022, somewhere here. I think I bought about 240, 250. I can't remember now. But I think what I saw was value and a nice dividend yield for a company that had some good growth. This company is still growing, some good growth in this company. And that's one of the reasons why I bought Ventia for the long term. Our next company is Downer. Okay. So why is this a breakout? And, or should I say, is this the definition of a Kneppy's breakout? Yes, it is. Company released their results on the 14th of February. And it went above the hold highs we saw back in July last year. So at least a 6-month high in the shares. Share price kept on going up the next day after at least the results, and the share price has just gone sideways since then. So like a flag or a pennant sort of pattern, if you do know your patterns. Some heightened volume as well. That's a good sign. I'm not the biggest fan of this company at all. I would not say this is a high quality company. So this would be sort of a trade where I only own shares in this company for a short to medium term period. I just take advantage of this breakout and a little bit of an increase in positive sentiment around this company. So another company where I've got to have a look at the results. Well, I don't necessarily have to have a look at the results to trade, I suppose. But yeah, another breakout. Metals X. So this is a breakout that possibly just happened on the last trading day of the week. In fact, if you have a look at the weekly chart, so I remember this company, it was about here, breaking out in late 2020 and went on a beautiful run. It broke out at about 10 cents, 12 cents, and the share price went from 12 cents all the way to 75 cents. I remember following it at that point in time and going, this would have been a great trade, and the share price fell off a cliff. This is exactly why I don't own commodity companies for the long term. Just look at the chart. You just own these for when the sentiment is positive. And share price has been consolidating for about 2 years, going sideways. And this could be a breakout, possibly a breakout. Share price rallied nicely, some big volume coming in, rallied nicely, up 15.5%. And the last time the share price was this high was back in July last year. In fact, if you just have put that line there, that old highs, share price is trying to get at least a 6-month high. But you can see there were also 2 other times in 2023 when the share price was high. So there is going to be a little bit of resistance moving forward for Metals X, but definitely a company to put on a watch list. Another company to maybe put on your watch list is NextDC. Again, this is not a breakout. In fact, the breakout for this company happened towards the end of January, so about a month ago. Share price went above a resistance level at about $13.50, or just above that level. And this goes back a while. Right, so, whoa, this is okay. You can see why that level is quite strong, why I have a thicker line there. So back in 2020, share price of NextDC got to around about, we'll say between $13.50 and $14, and then fell away. Then in September 2021, share price of this company got between or in that zone, that resistance zone again, and fell away. Share price of NextDC got into that zone again in August 2023 and then fell away. And so when the share price of NextDC got into that zone again in January of this year, there would be some selling, an increase in supply of shares on the market, because people know, so day traders, medium-term traders, investors know that in the past, when NextDC shares get between $13.50 and $14, there is some selling and the share price falls away. So we needed to see share price get above $14. And we saw this. We saw the share price get above $14 on the 2nd of February. Share price on that day rose 3% on slightly higher volume. And the share price of NextDC remained above $14 after that. We saw one day where the share price struggled. On that day, share price fell a little bit and got to a low of $14.05. So a little bit of a test. And then when that test failed, well, succeeded, I suppose is a better way, because the share price didn't fall below $14. The share price went on a nice run. And then the company released their results, share price went on a nice run, up 13%. So not a traditional breakout upon the release of the results, but this chart is looking bullish. I'd probably say, even though this company is highly loss-making, a lot of losses in this company, it's just the hype, maybe not hype, it's just the promised potential in data centers, and that increase in potential in data centers around AI, and data centers are going to be more important because of AI in the future. It's one of the reasons why I'm really bullish on Goodman Group, and maybe I should be bullish on NextDC. I'm just concerned because this company is not profitable, and I don't think they're a tech company. I still think this company is more of an infrastructure company, but I can see the other side of the argument as well. They're sort of like a cross, not a cross-dresser, a cross-infrastructure tech company. Oh, Credit Clear. Okay. Credit Clear. This is a nice little breakout. I'm not sure if this was on the release of the results. I was starting to follow Credit Clear a little bit more closely because of what happened on the 16th of February. Share price on that company rose 17.5% on that day. And if you just draw that resistance line a little bit further, it was really struggling to get above that level. And then on the 26th of February, share price of this company rose 20%. That was a breakout. Not sure what happened. Maybe it wasn't on financial news, but I just saw this chart before I started recording this video, and that does look like a breakout for some reason. So Credit Clear's chart looks pretty good at this point in time. If that was a breakout on the release of their financial results, this is the definition of breakout, because we have the volume coming in and the share price at least a 6-month high, about a 9 to 10-month high. Vita Life, or Vita Life Sciences, released their results on the 26th of February, and this is a breakout. Last time share price was this high was back in August 2022 or March 2022. So definition of breakout, apart from the volume, I probably would like to see higher volume coming in when the share price breaks out. But you can just see, just by looking at this chart, that shares in this company are illiquidly traded. So that's one thing you have to keep in mind around Vita Life Sciences. Mayne Pharma. I'm pretty sure I did feature Mayne Pharma in one of my videos, and the share price has rallied really nicely on the release of their results. Maybe I featured this company last week. I can't remember. or maybe I didn't. But when they released their results, it was not a breakout on 26th of February. The reason it's not a breakout was because on that day when the shares closed, the share price where they closed, $6, it was only like a 2-month high. But the share price kept on rallying, some good strength, some good volume coming in. And that means the demand for shares in this company overwhelmed the supply of those shareholders wanting to sell because they bought in the high we saw in December last year. So would be investors who bought at, say, 640, saw the share price fall from 640 down to $5, who thought this company's a dog stock. And to be honest with you, this company has been traditionally a really bad dog stock. When I say bad dog stock, I mean a bad company, a crappy company, a dog stock. And I can understand why some investors might be getting nervous, thinking, oh, the share price has collapsed just before the release of the results. The results must have really piqued the interest in the market because the share price, 680, last time the share price of this company was 680 was way back in August 2022. So this is another company where I was going to say I should look at the results, but again, if I'm trading, just keep your bias of the company. This has been traditionally a bad company, and I have that bias. And I just think this company is a bad quality company. Maybe they turned the corner, and I should just look at the charts. So keep my biases away from my decision making. So that's one thing I have to learn. Okay, Ramsay Health. This is a company possibly I might be thinking of trading. Share price going sideways, staying above a nice little support level at $48. Struggling to get above another level at about $54. Look at there it is, $54. So this trading range has only been in place for 6 months. And then the company released their results. The market liked it. Share price rallied 7.3% on the day, which is a pretty big day for Ramsay Healthcare. And then the next day, there was a little bit of selling coming in. Share price fell below $54 briefly on the day, fell to a low of $52.81. But enough buying came in, which saw the share price get back above $54. So this is a potential breakout happening before our eyes. In fact, all these breakouts are happening before our eyes. So potential buy. And last time the share price was this high was, again, late August 2023. So this is a 6-month high. Share price breaking out above, share price breaking out on the release of financial results and increase in volume. Definition of breakout. Doesn't matter what I think about the company. So again, this could be a breakout. One company I was thinking of buying, Challenger on a breakout, had everything going for it. Share price increasing on the day they released their results, up 8.4%. Share price continued to increase the next few days and then struggled. The one thing not going for this breakout was the volume. I would have liked to see bigger volume coming in. And then we've seen a little bit of weakness in the share price. Looks like maybe the shares went ex-dividend on the 20th of February. I'm just guessing because the shares fell on the day by 3%, which would make sense. 21-cent dividend. Dividend yield. I'm trying to see what the dividend yield is in TradingView. Probably somewhere in here. And then after that, they went to ex-dividend, the share price had fallen. But the share price has moved into this green zone, which sometimes can be a really good support level. If we start to see a bit of strength in the shares in this company, if we start to see a little bit of buying and the share starts to pop up, this could be a buy. And then the next level we want to see, probably a really important level, we want to see shares in this company get above is $7.30. And why? Because of this. There it is. That was the highs we saw back in July last year and the highs we saw back in February a few days ago, a few weeks ago. So if we see the share price of this company get above $7.25, that would be or could be a bullish move. I could trade this, less convicted trade, buying now on the expectation the share price will rally above $7.30. But I'm not sure that's going to happen. But I've done that in the past when I've just educated guests that the shares will go on a rally. Another company I've been thinking about buying is Pinnacle Investment Management Group, PNI. Share price has broken out. And there's two reasons why the share price broke out. Shares in this company were in a downtrend. So the top of the downtrend was a sloping downward line. Share price broke above that downtrend when the company released their results on the 2nd of February. Not only that, the share price moved above the old highs we saw back in August last year. So at least a 6-month high. So we had two things going for Pinnacle Investment. Going past the old highs and going and break in the downtrend. And Not only that, we've seen the shares or the market test the breakout or the old highs a couple of times, and the share price has rallied. So chart does look pretty good for Pinnacle. I'm not the biggest fan of these type of companies or these sort of fund management companies. Pretty sure this company invests in other funds. So this is a fund manager who invests in other funds. I'm not sure if I like that, but other investors seem to love this company. Okay, 6 companies to go. Next one is A2 Milk. Oh, I did buy it on the day they released their results. I thought, hey, I think the market's going to like these results. So I bought on open. Don't usually do that. And the share price was rallying before they released their results. So this is not a traditional breakout, or my very definition of a breakout. In fact, I probably would say the shares in this company almost broke out here in the 22nd of January, but even that's not a traditional breakout, but it was not a 6-month high. And the share price just kept on rallying. And I think that was on the back of expectations that the birth rates in China were going to improve this year. So this is sort of like a possible new uptrend in A2 Milk share price on the back of their results and expectations. Okay, Kina Securities. This is an interesting one. I've had my eye on this company for a few weeks, and the shares, and this is another instance where the share price of a company did not break out on the release of the results, but the share price went above the old highs in September, in January, and that old highs was 84 cents. Current share price is 91 cents. The market did like the results. Now, one of the reasons I'm keeping my eye on this company is just the value play. So this company's market cap of 261 million. The dividend yield and the P ratio will be really, well, dividend yield is going to be high, 10.99% dividend yield, P ratio of 5.96. So Kina Securities is sort of like a bank that has operations in PNG. So people think, oh, that's a risk you take. Buying a bank that has operations in PNG, oh, it's a big risk. And I'm willing to take that risk because it's a fairly low risk. For a dividend yield of 11% and a P ratio of 5.96. So you get the dividend and also get the potential over time of the P ratio increasing. So what do you call that? Expansion, multiple expansion. So you have the double whammy, which is a good thing. I'm using it in a good time, in a good way. You have double whammy of a really good dividend yield and possible multiple expansion and capital appreciation. And this company's growing. It's a growing company. I've just held back for some reason. Kina Securities, I don't know. It's a bank. That's probably why. Bank. On the other hand, we also have BFL, which is Bank of Pacific. So BSP stands for Bank of South Pacific. So if you don't like Kina Securities because they have operations in PNG, Bank of South Pacific have operations in a lot of those South Pacific countries like Fiji, Tonga, Samoa, maybe even also PNG. A much bigger company has a market cap of $3 billion, lower dividend yield, but still pretty nice at 9% and a P ratio of 8.2. And just like Kina Securities, I was tracking this company because I was waiting to see when the share price broke above $6. It broke above $6 towards the end of January and just took off. Look at that take off in the share price. But the share price has retreated from $7.20 to $6.34. And I'm thinking maybe now's the time to buy some shares in this company. Now, I won't say shares in this company are illiquidly traded. That's not exactly true, but definitely not as much trading in this company as some of the banks we have on the ASX. But I would definitely be more willing to buy this company because of the growth potential, much better growth potential in the future around this company than compared to the 4 ASX banks on the 4 banks on the ASX. So again, just a possible value play, some good dividends, much better dividend yields than the ASX banks, and I think a much better growth trajectory as well. And yeah, P ratio much lower than the 4 big banks. A company I will never own, G8 Education. Well, again, I've got to detach my biases away from my decision making because this chart actually looks potentially quite good. So I'm just going to draw a line here. The highs we saw back in start of 2023. Those highs were about $1.27. Share price of this company is $1.27. Share price rallied really good on the rest of their results, up 11.6%. and has tried to get above $1.27, which is the old high. So trying to get to a new high, not a new high, medium to long-term high. And I think that level is a resistance level for this company. Now, a few reasons why I'm not a fan of this company. Why does it do that? Do you have a trading view? It doesn't adjust. You have to change the settings and auto fit data to screen. There we go. I actually was or am an old or ex-shareholder of this company. Let's have a look at the weekly chart. You can see where I was a shareholder of this company without doubt. This period here, there was a roll-up model. They own daycare centers, that sort of thing. And when the roll-up model comes to an end, that's when you don't own shares in that roll-up model. So share price of this company got to a high of 520 back in 2014, almost 10 years ago. Whew, can't believe that was that long ago. And possibly, in fact, we can take that. Wow, that's a really strong resistance level. It's even stronger than I thought. So we have 1, 2, 3, 4, 5 times in the past 2 years for the share price has struggled to get above $1.27. And I think if the share price gets above $1.27, this could be a trade, even though I don't like the company. Okay, on to 2 American companies. So I am trading Snowflake, and look what happened to their share price on Thursday, local time. Share price fell 18%. At one point in time, the share price was down over 20%. The reason why the share price fell 18% was because the CEO resigned or retired. I think it retired is a better way to put it. And the results beat expectations, but it was the guidance by the company the market didn't like. And the guidance was only a little bit lower than market expectations. And this is something I've seen time and time again, particularly in America. They will punish or reward a company if they slightly beat or slightly don't beat expectations or guidance. Way overkill, down 18% on that day. Now, I sort of understand it because this company is not yet quite profitable, but are still growing at a really good rate. So technically, I should sell out of my trade in this company. I was just waiting for a bounce back up above when I bought. It can be a bad thing to do, just waiting for the bounce. But I think there will be a bounce eventually. The other thing I was thinking is the market punished this company because they thought the guidance was going to be better. And there is a potential that the management is being a little bit conservative because they will have a new CEO, and the directors want the new CEO to have a win. And the best way the new CEO could have a win is if the company beats guidance. I think that's what they're doing. Sneaky thing, if that's what they are doing. The other company I was thinking of trading was C3 AI, ticker code AI, probably the best ticker code on the New York Stock Exchange. And this company did have some good results, beat market expectations. I did a little bit of research on that day, thinking this could be a trade. And then I had a look at the cash burn. Oh, this company's still burning through so much cash. Not profitable, burning through so much cash. A ridiculous amount of cash. I think we can see the cash flow statement in trading view. So this company burning through around about $50 million of cash just in operations. And that's not accounting for investing and what's the other one? Investing and financing cash burn. That's a quarterly. In the last year, financial year, this company burned through $116 million in cash just in operations. The year before that, 86 million. The year before that, 37. So the cash burn is getting worse. And that's the thing that held me off. So again, I have my biases, and possibly if you are trading, just trade on the chart. Don't worry about the company and how they're financially performing. And my trade would have been, I would have bought it maybe at $36. So I'm going to keep my eye on how the share price of this company keeps going from here. Sort of a interest at this point. So that's all I've got for this video. Went a little bit longer than I hoped, but if you have any questions, any thoughts, if you have any other companies whose shares have broken out, I'd love to see those companies or hear about those companies, because I might have missed a few companies, although more than likely I haven't, because I do go through most charts on the ASX on a weekly basis. Anyway, so leave your thoughts, your comments, your suggestions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.